So today we're going to be talking about the SIPP, the self-invested personal pension, which, as it kind of says, is a form of pension. This is a way for you to save and invest for your future, and also a way of getting some free money out of the government. It also puts you totally in control. That's the great thing about the SIPP. So it's a really fun way of taking control of your finances. Does that all sound pretty good? Let's get into it.
But aren't pensions just boring? Well, it is difficult to think about something that might be happening 30 or 40 years in the future. And let's face it, we've all got more interesting stuff to do, and it's hard to think about putting money away for that length of time. And of course, pensions can be a bit complicated. There's usually an indecipherable set of rules. They change about every 15 minutes, which makes it really hard to keep up with what's happening. So to be honest, there's quite a lot of truth in the fact that pensions can be a bit hard to think about. I remember when I started mine, I'd been in a job a couple of months, not earning a lot of money, knew nothing about investing or pensions. And to be honest, I worked in finance, which is a bit of a confession, but I did know that the earlier that I got started, the better, however painful, however hard that was going to be. So I started paying into the company scheme. Now today we have something called auto-enrollment, which means that everybody who starts a job will go into the company pension scheme, and we'd highly recommend that you do that. But there is a way you can get more control, and you can choose what investments go in your pension. Sounds scary? Well, at least it won't be boring.
So as Simon said, there is another way. So alongside your workplace pension and of course your state pensions, if you've been contributing to your national insurance, then you will also be eligible for a state pension. You can also have this account that you totally control yourself, and that's the SIPP, the self-invested personal pension. So what is a SIPP? Well, it's a DIY investment account. It's got special tax privileges attached to it, and you can invest that money however you like. You can put it in funds, in investment trusts, in shares, in bonds. And what are those tax privileges? Well, the government is going to give you money to contribute towards that pot so that hopefully you can have a really nice retirement.
So how do you actually get your hands on this free money? Well, it's pretty simple actually, and it works like this. You open a self-invested personal pension with one of the providers. There are quite a few. The top three are Interactive Investor, Hargreaves Lansdown and AJ Bell. You then put some money in. Let's imagine you put £1,000 in your SIPP. This will be done at the basic rate of income tax. So for example, if you put £1,000 in the SIPP, the government will add another £250, giving you £1,250 to invest in pretty much whatever you would like. And it really is that simple. If you're a higher rate taxpayer, you can claim even more through your tax return. But there are some limits to what you can put in, to how much tax relief you can get, and those depend on the tax year and also your personal circumstances, so check those out online.
Is that the only benefit? No. I mean, the thing about a tax wrapped account like this is that you don't pay any tax, which come in various forms when you make savings and investments. So the first is capital gains tax. When the value of your asset goes up, you'll pay tax on anything more than $12,300 in gains. There's also taxes on dividends. That's the income that you receive for shares. You'll get taxed on anything more than £2,000 there. The final one is interest on savings and income from assets like bonds. Again, if you're a lower rate taxpayer, you'll pay tax on anything more than £1,000. Higher rate taxpayers pay on anything above £500. So any of these taxes are not applicable when you invest within your SIPP. I think the other really great thing to mention about a SIPP is it is a great way of bringing together all those little pots that you might have built up over time. I mean, these days people tend to hop around from job to job and they end up with all these tiny little pension pots. So you can scoop them all up, put them into one account which you have control on and therefore can build towards that better future.
So what investments can go in your SIPP? Well, it depends on your provider. There are some differences there, but basically all mainstream type investments are eligible to go in a pension. So that means things like shares, investment trusts, bonds, whether they're corporate bonds or government bonds, unit trusts and open-ended investment companies, otherwise known as funds, and then these trackers called exchange-traded funds. But remember, with all of this, you will be doing the choosing. So if you're not familiar with these different types of investments, check out the other videos in the channel. Don't forget to subscribe, of course, while you're there. And if you do have a burning question that's not answered by any of the videos, just leave it in the comments and we promise we will get back to you. Remember, there are no stupid questions when it comes to investing, so just drop us a line.
So what happens when you retire? Well, there's a couple of things to note here. Firstly, you can draw down a SIPP from a much earlier age than a state pension. So as it currently stands, you can access your SIPP at 55. And that is going to rise to 57 in the year 2028. Could go higher. Who knows what that will be by the time we retire. The second thing is the total flexibility with the pot at the point that you want to retire. So at 55, you don't have to retire and draw it down. You can keep investing and adding money to and getting those tax benefits. But at the moment you want to retire and start drawing down the pot, you've got more options than you ever had in the past. You can buy an annuity. That's just a guaranteed income stream that an insurance company will give you for the rest of your life until you die. Or you can start just drawing it down yourself and taking cash from the pot. Now, there are taxes that come with this. 25% is actually tax-free, but 75% of that pot will be taxed as income. There's one more thing to remember though. Don't forget, you have a tax-free amount of money that you're allowed to earn each year. Currently, that's £12,570.
So are there any catches to owning a SIPP? We've talked about lots of benefits. There's got to be a catch, right? Well, we don't see this quite as a catch, but you do need to be aware that your platform provider will charge you a fee for running your SIPP. It just covers their admin costs. Now, those fees can amount to several £100s a year, depending on the platform. So it's worth checking that out before you start. Compare the platform is a good place to go. You can put in different variables according to size of pot, how frequently you're going to trade, the different types of assets you might be buying, and then get an idea of just how much those fees might cost at different providers. So the rule is shop around, much like anything else in life. And don't forget, if you're not happy with the platform that you've opened your SIPP at, you can transfer it. But again, just make sure you're not being held in by any transfer fees. Just check that out in the small print.
So in summary, SIPPs are a great way to take total control over your financial future. And because the government is giving you that extra money, they are pouring fuel into your investment engine. And the third great thing about them is it's totally flexible when you retire. So you can do whatever it is you want with that pot. So we hope you found that all useful. Please like the app and subscribe to the channel if you want to keep abreast of the latest. And of course, send us any questions. We know pensions can be pretty confusing. We'll see you next time.
Goodbye.